All right, so the first major stress test for the Plazm Protocol is officially in the books. Day 76 brought a massive token unlock, and let's not sugarcoat it, the price action was brutal. But the real story, it's not about the price. It's about what was happening right underneath the surface. So, let's break down this final report. The final numbers for Day 76 are in, and as we dig into all this data, just remember, the clock is already ticking. The main event, that massive Day 78 unlock, is now just about 36 hours away. Okay, let's just get right to the headline number that everyone is talking about. The Plazm price is sitting at 12 cents. That's a 54% drop in just 2 days. We're talking new all-time lows here, and there's just no way to spin that positively.
And this wasn't just happening to Plazm in a vacuum. The ripple effect absolutely hit related assets, with the E-share price dipping 13%. You look at the whole market, and the Fear and Greed Index has just plunged to 21, which puts us squarely in extreme fear. So on the surface, yeah, the picture looks pretty bleak.
But that brings us to the real question, the core of this whole analysis. A 54% price drop, is that really the whole story? Because what was happening underneath, at the protocol level, tells a radically different tale.
And this right here, this captures the two competing narratives perfectly. On one side, you've got the story of price, driven by fear, and it's down 54%. But on the other side, you have the story of conviction, which is reflected in what people actually did, and that drove a key metric up by an astonishing 29%.
So let's break that down. Get this, while the price was plummeting, a net total of over 52,000 additional PLA-ZZM tokens were staked into the protocol. This wasn't some small increase, it was a massive surge that shows a clear decision by holders to accumulate, not to panic sell. And what's the result of all that new staking? Well, it generated an increase of 290 million new shares for stakers. That grew the total share pool by 15%. It means people were actively using the price drop to load up and increase their long-term position and future earning power.
At the very same time, the protocol's defense mechanisms were just firing on all cylinders. Over 4,400 additional tokens were permanently burned. Poof, gone from circulation during this cliff period. That's an 18% increase in the total burn supply.
So after all that action, what does the overall token situation look like? A full 63% of all Plazm is now staked. Only 8% of it is liquid and easily sellable on the open market. That story of conviction is now literally written into the protocol's supply dynamics.
Now that increase in burns brings us to a really important concept, burn efficiency. To put it simply, this just measures how many tokens get destroyed for every single dollar the protocol spends on its own defense. And let me tell you, when prices are low, this metric becomes incredibly powerful.
Just look at this chart. It puts everything in stark relief. At the peak price of 95 cents, $1 spent on defense could burn about 1 token. But today, at 12 cents, that same dollar burns over 8 tokens. That means the protocol's defenses are now 690% more efficient. Every dollar of defense has dramatically more punch.
So the big question, with all this insane pressure, how did the core defenses hold up? The answer? Perfectly. The mathematical floor price of the protocol held stable at 3 cents through the entire event. It did exactly what it was designed to do.
And what that means is even after that huge 54% drop, today's price of 12 cents is still a full 300% above that mathematical floor. Sure, the cushion has tightened, but a very significant buffer is still there.
And other health metrics show the protocol's engine just kept running smoothly. You know, yield continued to flow to holders, with claimed profits rising. More bonds were issued to support the system. And maybe most importantly, the defense pools are still healthy. Even after being used, they still hold over $57,000, with that crucial bond and burn pool holding over $22,000 in stablecoins.
So that was the past, which brings us to the future. Let's look at what's coming down the pipe. Day 77 is a smaller unlock, but Day 78, just 36 hours from now, that's the big one. We're talking nearly 2.4 million tokens set to be released. That is the main event, and it's followed by a pretty significant aftershock on Day 79.
Now here's where the recent price drop actually becomes helpful. It prepares the protocol for this next wave. If that Day 78 unlock happened at the peak price of 95 cents, it would have created over $2 million of potential sell pressure. But at today's price, That same number of tokens represents just $286,000.
What this means is that the painful price action of the last 2 days has actually reduced the dollar-based threat of the Day 78 unlock by a staggering 87%. In a weird way, the system has already absorbed a huge chunk of that potential impact before it even happens.
So let's just do a rapid-fire recap. Price, down 54%, but staking, up 29%. Burns, up 18%. Shares, up 15%. And the floor cushion is still holding at 300%. You see, two completely different stories being told by the exact same set of data.
And really, this is the bottom line. This is what it all boils down to. If you only look at the price, you are seeing the story of fear. But if you look at what holders actually did with their tokens, you see an overwhelming story of conviction.
Day 76 was the dress rehearsal. It gave us the answer we needed about how this community would behave under fire. The data is now crystal clear, the patterns have emerged, and that conviction has exceeded even the most optimistic projections. And now, 36 hours remain until the main event.
And just a quick reminder before we wrap up, this content is for educational and informational purposes only. Nothing in this analysis constitutes financial advice. Please always do your own research before making any investment decisions.